My people do not need promises. They need fields to feed their children and schools to shape their dreams. I am no hero, just a son of this soil, working to give my nation the dignity it deserves.
Burkina Faso, long a target for foreign exploitation under the banner of foreign investment and development, is now decisively reclaiming control over its natural resources, with gold being the biggest among them. In a significant and strategic move, the Burkinabè government initiated a request to acquire an additional 35% stake in the Kiaka gold mine, one of the country's richest gold assets. The mine is currently operated by West African Resources, a foreign mining company headquartered in Australia. This request sent immediate shockwaves through financial markets. West African Resources was forced to halt trading on the Australian Securities Exchange on Thursday, a clear sign that the era of unchecked foreign profit extraction from African soil is under direct challenge. West African Resources, which began as a struggling exploration company, rapidly transformed into a major foreign beneficiary of West Africa's mineral wealth. By extracting roughly 500,000 ounces of gold per year from African soil at minimal operational cost, the company profited handsomely while African communities saw only a fraction of the wealth generated. Despite claims of having paid hundreds of millions in taxes and royalties, the disparity between the value of extracted resources and local reinvestment remains glaring. With the Kiaka mine expected to generate billions in revenue, the Burkinabè government is taking proactive measures to ensure those billions stay in Africa. The request for a larger state stake in Kiaka follows a wider pattern of national reclamation. In 2024, the Burkinabè government began a bold, unapologetic campaign to regain full control over its gold sector, a sector that has, for too long, served as a pipeline funneling African, quote, wealth to foreign shareholders. That campaign continues to send ripples through the foreign mining industry. Orezone Gold, another foreign-owned company operating the Bombere mine in Burkina Faso, also halted trading in response to the news. While Orezone reported that it had not yet received a similar request from the Burkinabè authorities, it acknowledged that it would be meeting with government officials over the weekend. The unease among foreign investors is palpable, but for Burkina Faso, it marks a moment of long-awaited empowerment. The move has already exposed the brittle foundations of foreign investment in West Africa, especially when that investment depends on political and economic instability to secure favorable terms. For decades, instability in Mali and other neighboring countries has been used as justification for foreign companies to swoop in under the guise of stabilizing the economy, all while walking away with Africa's gold. But Burkina Faso is not standing by passively. Instead, it is taking strategic control through its new state-owned mining enterprise, Société de Participation Minière du Burkina Faso. This newly established entity is not just a bureaucratic tool, is a national instrument of liberation and resource sovereignty. Already, the state has added several key gold assets to its national portfolio. In June, 5 gold mines and several exploration permits previously held by foreign corporations such as Endeavour Mining and Lilium were transferred to the state-owned company. These assets, once operated for the profit of external shareholders, are now under Burkinabè control, reintegrated into a national framework focused on local benefit and self-determination. The movement gained full momentum in August 2024, when the government nationalized both the Bangu and Wabmia mines. These mines, previously sold with a combined valuation of over $300 million, were reclaimed by the state for just $80 million, a symbolic and strategic reversal of years of undervalued asset stripping. The government did not overpay to reacquire its own land. Instead, it exposed the gross imbalance in how African resources have been historically priced, bought, and sold under foreign-dominated systems. Burkina Faso's actions are not isolated, they represent a broader continental awakening. As the fourth-largest gold producer in Africa, the country has recognized that mere royalties and taxes are insufficient forms of compensation for the plunder of its resources. Ownership, not just revenue sharing, is now the goal. The wave of reclamation sweeping Burkina Faso is not yet complete. Several foreign operators still hold precarious positions, clinging to what remains of their privileged access to African gold. Among them is IAMGold, a Canadian mining corporation that continues to operate the Essakane gold mine, one of the country's most lucrative sites. The Burkinabè government currently holds only a 10% stake in the operation, a legacy of unequal agreements that once defined Africa's relationship with the West. But IAMGold's grip is weakening. The company's activities remain severely hindered by growing security concerns, both physical and political. No longer is the protection of foreign capital guaranteed. The old systems that allowed multinationals to extract wealth in exchange for minimal returns to local populations are being shaken at their foundations. What is unfolding in Burkina Faso today is not just a policy change, it is a rebirth. A new generation of leadership has emerged, unafraid to confront the entrenched interests of former colonial and neo-colonial powers. At the forefront of this movement is Ibrahim Traoré, a 37-year-old military officer who took power in 2022. Since then, he has declared a clear mission: to liberate Burkina Faso from external domination and restore African control over African wealth. Traoré has openly rejected the decades-long model of Western dependence and interference. Instead, he has called on his government to assert full sovereignty over national resources, framing this era as the beginning of a Pan-African resurgence. He does not speak as a mere administrator, he speaks as a symbol of resistance to a system that has drained Africa's riches while leaving its people in poverty. His message resonates far beyond Burkina Faso's borders. In April 2025, tens of thousands of supporters flooded the streets of the capital, Ouagadougou, after an alleged coup attempt was foiled. The people did not rally to protect an office, they rallied to protect a vision. That of an Africa no longer dictated to by foreign generals, diplomats, or CEOs. The protests were not confined to Burkina Faso. In a striking demonstration of Pan-African solidarity, members of the African diaspora organized rallies in London, Kingston, and Montego Bay. Their voices echoed across continents, lifting Traoré as a black liberator, a symbol of unity, strength, and reclamation. They condemned foreign military leaders such as General Michael Langley, head of the United States Africa Command, who had accused Traoré of misusing national gold reserve. For many Africans, both on the continent and abroad, such accusations are not warnings, they are confirmations that real power is being reclaimed. Still, challenges loom. The Islamist insurgency, fueled by decades of instability and foreign meddling, continues to threaten the country's rural regions. Whether Traoré can repel this force and consolidate internal stability will determine whether the flames of resource nationalism spread throughout West Africa and beyond. For the Western mining industry, this is a turning point and a warning. What they once considered long-term investment agreements are now being revealed for what they often were: instruments of external control written under unequal terms and subject to reversal once African nations assert their full rights. The idea that such agreements are sacred or immutable is crumbling under the weight of African resistance. Multinational mining giants are watching closely. While Burkina Faso reclaims what is hers, corporations are looking to shift operations to countries perceived as more pliant nations where foreign capital still wields influence over policy. Ghana, Egypt, Namibia, and Botswana are now being positioned as safe havens for Western mining interests. Côte d'Ivoire and Guinea too are being eyed as fresh frontiers for extraction. But nothing is certain. Even in Guinea, where Anglo-Australian mining titan Rio Tinto is pouring billions into the Simandou iron ore project, the specter of African assertion looms large. The days of operating with impunity are coming to a close. Africa is watching and learning. Success on the continent, once thought to hinge on legal contracts and diplomatic courtesies, now depends on something far more elusive to foreign companies: legitimacy. Canada's Barrick Mining, one of the largest players on the continent, continues to navigate the shifting tides in Mali. Its size, diversified holdings, and deep governmental ties have so far insulated it from the tremors. But even giants must tread carefully in a new Africa that no longer views resource ownership as negotiable. For smaller foreign operators like West African Resources, the message is even clearer. The era of quietly reaping the benefits of African gold while offering token returns is rapidly ending. Uncertainty for them is not a glitch, it is the natural result of a region awakening to its power. The assertion of sovereignty over Burkina Faso's gold sector has now moved beyond declarations. It is being etched into the laws of the land and reflected in the balance sheets of once dominant foreign players. One of the most revealing shifts came in mid-2025, when West African Resources, still the largest single gold producer operating in Burkina Faso and one of its most entrenched foreign stakeholders, was compelled to implement sweeping changes to its financial relationship with the state. Following the revision of the National Mining Code in 2024, a move rooted in economic justice and resource sovereignty, the government of Burkina Faso formally increased its free carried equity stake in all West African Resources projects from 10% to 15%. This was not merely a technical adjustment. It represented a tangible shift in ownership and enforced transfer of wealth and power from foreign hands back to the Burkinabè people. In its interim financial report for the first half of 2025, West African Resources acknowledged the implications of the new code. The company logged an accounting impact equivalent to 33.4 million Australian dollars, recorded as a decrease in retained profits and a corresponding increase in the government's non-controlling interest across three major mines, Sombrado Cat, operated by the subsidiary Somisa, Kiaka, and Toga. Unlike in previous eras, where such transfers might have been framed as concessions or symbolic gestures, this reallocation came with no payment required from the Burkinabè state. There was no bidding war, no backroom negotiation, only a legal recalibration to reflect the true stakes of those whose land and labor have for generations underpinned the country's most vital export, gold. This adjustment also set in motion a new fiscal arrangement for the future. In addition to the increased equity, each of West African Resources' local subsidiaries is now legally obligated to pay the Burkinabè state an annual priority dividend equivalent to 15% of the profits generated by the projects. The remaining 85% of the profits may still be claimed by the company, but only within the limits of available free cash flow and subject to scrutiny by the national authorities. This new structure stands in direct contrast to the profit repatriation model that had previously allowed foreign companies to extract both resources and revenue with minimal redistribution. Burkina Faso has now rewritten that story, introducing a mandatory stream of capital that will flow directly into the public purse, rather than being siphoned off to distant headquarters and offshore accounts. The financial recalibration has come at a critical juncture. Facing immense security pressures due to the ongoing insurgency in the north and east of the country, the Burkinabè state has had to mobilize every available resource to defend its sovereignty not just economically, but militarily. Gold is not just a commodity, it is the country's most essential export and the primary source of foreign currency. Reclaiming greater control over its production and proceeds is therefore a matter of national survival. By embedding equity redistribution and profit sharing into law, the government is ensuring that the nation's mineral wealth begins to serve the people of Burkina Faso, rather than enriching the foreign elite. For decades, mining companies operated under frameworks designed outside the continent, benefiting from laws and tax codes tailored to favor foreign direct investment over domestic self-reliance. That era is fast coming to an end. Moreover, the government's approach is not erratic or reactionary. It is strategic. The changes introduced through the revised mining code are part of a broader, coordinated economic strategy, one that aims to systematically shift the balance of power from multinational corporations, national institutions. Each equity gain, each dividend clause, each asset repatriated is a step toward ending the asymmetry that has kept Africa's wealth flowing out and its people underdeveloped. While West African Resources has thus far complied with the government's demands, its financial reports tell a deeper story, one of forced adaptation to a reality they no longer control. What was once voluntary philanthropy or corporate social responsibility has now become compulsory redistribution. The company can no longer simply pay royalties and call it partnership. It must now reckon with the political will of a nation demanding its fair share not as a favor but as a right. As these legal and fiscal shifts unfold, they send a clear message across the region. Burkina Faso is not asking, it is taking. The gold that has for too long served foreign portfolios is being reclaimed by the people whose soil, sweat, and struggle made its extraction possible. Burkina Faso stands at a pivotal crossroads, one where the veins of gold running beneath its soil are no longer seen as mere economic assets, but as instruments of liberation, security, and resistance. The country is rapidly expanding its industrial-scale gold production, with output forecasted to rise by 4% in 2025, reaching an estimated 55.7 metric tons. This surge is not incidental, it is deliberate, calculated, and deeply political. According to Aristide Belmsabgo, Director General of Mines and Geology at the Ministry of Energy, Mines and Quarries, the increase in gold production is being driven by the government's strategic efforts to solidify resource control and direct revenue away from foreign hands and into national coffers. This expanding industrial output reflects a deeper philosophical shift. Gold is no longer just a mineral, export it is a national lifeline. For Captain Ibrahim Traoré and the leadership in Ouagadougou, this moment carries historical weight. Since assuming power in 2022, Traoré has not only challenged the old colonial order, but has moved to sever ties with Western states that have long dictated Burkina Faso's economic and military orientation. In their place, the country has embraced new alliances, most notably with Russia, as part of a broader realignment aimed at reclaiming sovereignty on all fronts. But such independence comes at a price. With many former Western partners withdrawing financial and military support, Burkina Faso must now fund its own defense against a virulent Islamist insurgency that continues to destabilize its northern and eastern territories. And to fund this fight, the state is turning to what has always belonged to it: gold. Crucially, this newfound resource assertiveness comes at a time when global gold prices are reaching historic highs. Rather than seeing this as a windfall for foreign shareholders, the Burkinabè state is leveraging these prices to strengthen its fiscal position and reduce dependency on international donors whose aid often came with hidden costs and heavy strings attached. This is not just an economic shift, it is a redefinition of power. Even as the government reduces foreign influence, it continues to exert control over the operations of major foreign mining companies still present within its borders. Chief among them is West African Resources, which remains the largest single gold operator in the country. Although its share in the projects has been reduced under the revised mining quota from 90% ownership to 85%, the company still controls vast reserves. An estimated 6.5 million ounces spread across the Sombrado, Kiaka, and Toga gold projects. These assets were once the cornerstone of Western profit extraction. Now, they are becoming tools of African statecraft. The company projects an average annual output of 480,000 ounces over the next 10 years, with a production peak anticipated in 2029 at 569,000 ounces. In the short term, output is already expected to increase by 40% in 2025 alone, thanks in part to continued exploration, including an aggressive 25,000-meter drilling campaign at the M5 target within the Sombrado deposit. While foreign investors continue to calculate their returns and hedge their risks, the Burkinabè state sees something far more profound: an opportunity to finance its own transformation. Each ounce of gold is a potential school built, a hospital equipped, or a security operation funded. Each ton exported under new ownership structures brings the country one step closer to economic justice and collective dignity. The political implications stretch far beyond Burkina Faso's borders. In Ouagadougou, state officials speak openly of not just managing resources but reclaiming them. The revised mining code and national fiscal policies are designed not to attract more exploitative contracts, but to re-anchor wealth within the borders from which it originates. Gold, once the currency of colonialism, is being reforged as the foundation of freedom. This reclamation mirrors a broader movement across the Sahel and wider African continent. From Mali to Niger, and increasingly across the Gulf of Guinea, governments and grassroots movements alike are demanding that natural wealth serve national development, not foreign dividends. The narrative is changing from dependence to defiance, from extraction to emancipation. Burkina Faso is no longer content to be a resource outpost for global capital. Its mines are now bastions of resistance, and its gold, long siphoned away, is now returning to fuel a new future, one built not on charity from the West, but on the hard-earned wealth of its own land.